most of the risk, if not all of the risk, in my opinion, has been stripped off it in the past 4 years, especially over the past 12 months. And yet, most people don't appreciate this fact. So we're at a very critical inflection point where you already know the banks will embrace it, the insurance companies will embrace it, the governments will embrace it. You know, the accounting professionals embraced it, Wall Street has embraced it, companies have embraced it, international markets have embraced it. You can see it all, and yet the conventional investor, the mainstream media, they still don't get it yet. And so this is like a once-in-a-lifetime opportunity where you can know something. You know the future. It's very clear. You know why the future is clear, and everybody else just doesn't see the future yet.
Bitcoin has moved far beyond the phase of wild speculation and tech world hype. While headlines still obsess over daily price swings and political controversy, a deeper transformation is quietly taking hold. Behind the noise, the world's financial infrastructure is adapting. From institutional frameworks to accounting standards, the rails are being laid for something far bigger than another bull cycle. And yet, strangely, most people still don't see it. Investors remain cautious, media narratives are stuck in 2021, and the public is largely unaware that the risk profile of Bitcoin is no longer what it used to be. Michael Saylor, a name now synonymous with institutional Bitcoin conviction, believes we're at a rare moment in time, a window where the clarity of the future exists, but mass recognition hasn't caught up. To him, the last 4 years have quietly de-risked Bitcoin at almost every level: regulation, adoption, infrastructure, and liquidity. Banks are building on-ramps, insurers are modeling exposure, and public companies now hold Bitcoin on their balance sheets. The groundwork is done. What's missing, he argues, is attention. This disconnect creates a unique opportunity, not the kind you chase in a frenzy, but one you quietly understand before the rest of the world catches on. And that's the edge. Let's watch clips from Michael Saylor's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I have gone through 100,000 pages of economic history by Murray Rothbard, of political history by Will Durant, all the Austrian economists, Hayek and von Mises, you know, all of the political histories, and they're my mentors, learning from that. And then I've spent a lot of time communing with AI, which has also read all of them, you know, and discussing what it thinks. And I'm very inspired by the great thinkers throughout the civilization. And of course, you know, if I had to pick one mentor of the modern era, it would be Satoshi, because Satoshi gave us perfect money. And I date January 3rd, 2009 as the singularity. All of the historians, all of the writers I read, Voltaire and von Mises and Rothbard and Durant, they all lament that the world is an imperfect place, the money is broken, and government policy intervention doesn't work. All of them agree on that. It took Satoshi to give us the solution, because the solution was, for the first time in human history, we can tightly bind economic energy to the individual, put it in their head. And so this idea that we can invert the entire power structure of the human race by pulling the energy out of the land, out of the currency, out of the gold, out of the companies, out of the collectibles, out of the bonds, and put it into the heads or the hands of the people, that's a profound breakthrough, because that gave us the hope that we could actually deliver economic freedom, political freedom, you know, dignity and sovereignty to humanity. Well, I would like to say that was a dream before January 3rd, but the truth is all of these historians, all of these economists I've read, they never articulated the dream. They couldn't conceive of the solution. They just gave you 100 examples of the problem. And so if there is one mentor, it's got to be Satoshi. Bitcoin is a truth virus wrapped in a freedom virus, wrapped in a monetary virus. And it is spreading throughout the entire world. When 10 people on the city block embrace it, it becomes more powerful. When the richest person on the block embraces it, it becomes more powerful again. When a small city embraces it, it becomes more powerful again. And the city's transformed. They become more truthful, and they look out further, and they become more rational. And then everyone in the network benefits. And so as Bitcoin spreads virally through cities and counties and states and countries, on one hand, it's drawing their energy. On the other hand, it's transforming them. Every single politician, every single person that seeks to benefit from Bitcoin finds themselves transformed by Bitcoin. So it is a virus, but it's a virus of rationale, and it's a virus of truth, and it's a virus of soundness, sound money. So as more and more countries embrace it, it will actually make Bitcoin stronger. Bitcoin is better if adversaries, if the 20 superpowers in the world, or the 20 powers in the world, they all embrace it, they will all create a countervailing check and balance on each other that strengthens the protocol and actually strengthens everybody in the network. So I don't worry about it spreading to other countries. I don't worry about it spreading to more powerful companies or any other entity. I think Bitcoin is a perfect machine made of imperfect parts. And it is true that every single person that adopts Bitcoin will be imperfect. Every company, every government, they will all be imperfect, but they will give their energy to the network. The network will become even more anti-fragile, even more robust, and even more powerful. And that is the impact of this brilliant crypto virus that was unleashed by Satoshi on the world. Lots of people will come up with lots of things to do with digital capital over time. What we're doing with it is we're using it as collateral. It's the base layer that we use to issue billions of dollars of bonds. We've issued about $10 billion of bonds that were backed by the Bitcoin. And now we've just issued 2 preferred stocks, one called Strike, and there's about $1 billion of it floating in the market now. That is backed by the Bitcoin. And another thing we issued called Strife, that provides a 10% dividend at par value. That's the sort of the highest yielding instrument of its kind in the market. That is backed by Bitcoin. So when people are buying this preferred stock called Strife, we're agreeing to give them 10% yield forever, for 100 years, for 1,000 years. And so how are we doing that? We're investing our own Bitcoin. And then their question is, well, how will you pay us? Well, we're invested in Bitcoin. Bitcoin's appreciating. I think it'll appreciate 30% a year for the next 20 years, and then 20% or more. So the Bitcoin is the engine that is generating the dividends, that is generating the collateral and the security for those fixed income investors. The future of our company, our business strategy, is we wish to be the global leader in the issuance of Bitcoin-backed credit. We want to issue a preferred stock that gives you European yield in return for Bitcoin yield. So we'll give the Europeans more yield than they're getting from their corporate bonds. Or we'll generate yield for the Japanese yen. So the Japanese investors get 50 basis points in yield from their corporate bonds. If we go to Japan and offer 10 times that much, they're getting JPY yield. We will take back Bitcoin yield, you see. So what we're doing is we're creating Bitcoin yield for our equity investors, and we're giving fiat yield for all of the conventional fixed income investors. That's a $300 trillion market. When you're saying, well, how are we actually getting value for the Bitcoin? The Bitcoin is generating yield for our equity shareholders because every time we sell any of those fixed income instruments, that generates BTC yield. And then, of course, the fixed income instruments generate a more secure, higher yield for the conventional investors. And that's a business that can grow scalably for a long, long time. The critical thing is we have to have the Bitcoin. We have the $60 billion of Bitcoin collateral. That's what allows us to secure the loan And that's also what allows us to provide the performance to the convertible preferred stocks that the investors want. And so it's a very elegant strategy right now. The beauty of the strategy is we hold our own Bitcoin. We're not giving it to anybody else, hoping they'll give it back to us.
Bitcoin didn't just show up, it rewrote the rules. Born from centuries of economic failure and political decay, it offers what no philosopher or economist could: real, incorruptible money. It's spreading like a viral idea, one that makes everything it touches more honest, more resilient. Cities change, people think deeper, and systems evolve. And now, it's breaking into global finance, not as hype, but as collateral. Quietly, the foundation of tomorrow's economy is being built, block by those who truly understand it. Bitcoin is quietly threading its way into the global financial system, not by breaking it, but by meeting it where it is. Investors across the world are finding ways to plug in, whether through bonds, equity, or yield-backed instruments. Each new participant spins the flywheel faster, pushing value into the network and drawing strength from it in return. From Tokyo to Toronto, it's not hype, it's movement. And according to Saylor, at this point, trying to stop it is like arguing with gravity. Let's watch more clips from the interview.
If I were to go to a conventional investor and I were to say, what would you rather have, 50% return and 50 vol, or 20% return and 20 vol? The majority of them would want 20% return and 20 vol. The actual market for that is 100x bigger. And that's because they just don't want to get on the roller coaster. And Bitcoin is a roller coaster for many. But having said all that, the capital markets are structured. So there are some people that have billions of dollars to invest in venture capital. They have to invest in a private equity of a venture. There are other people that have billions of dollars to invest in bonds. They have to buy the bond. Other people have billions of dollars to invest in convertible bonds. They have to buy the convertible bond. Some people have billions of dollars to invest in equity. They can't buy Bitcoin. They can buy a Bitcoin company. And so when you look at the overall capital markets, and I'm talking about $400 to $500 trillion, that's been structured over 50 years. These people created that fund. All the famous money managers you know, they've been in the business 30 years. So 10 years ago, they agreed with their limited partners, the pension funds and the endowments. They agreed they would invest that money with this strategy. They have to stay in their lane. And the charter doesn't include Bitcoin. So what we're doing is if you're a private company, you give the venture capitalist Bitcoin preferred. And if you're public, you give the equity capitalist public equity. And if you give credit instruments to credit investors, they can buy it. Believe it or not, there are some people that can only invest in distressed debt from bankrupt companies. I do not intend to ever serve that market, right? I'm not going to bankrupt myself to give them something to buy from me. But they have to buy that. And so once you understand where all the money is, you have the people in Japan, they want Japanese yen denominated yield. I could say, well, I'll give you something better in dollars. They're like, I can't buy it. We have a 10% yield in dollars right now. They're getting 50 basis points, 1/20th as much in yen. They're not going to buy the thing that's 20 times better. They might very well buy something that yields 4% in yen because it's in yen. So you have to go to the investors and give them the instrument they want, structured the way they want in their capital market, if you're going to get them to trade their capital for your security or your investment idea. And that's what we're doing as a business in order to grow the Bitcoin ecosystem and bridge the traditional capital markets with the crypto economy. Bitcoin is the most cooperative, most ethical, most inspirational network in the world. Every time someone joins the network and contributes their capital to the network, all the rest of us become more powerful, more secure, and more successful. So I could say, hey, it's like electricity. We have electricity. Every company's going to use electricity. Why would I be threatened? But that would be a much weaker metaphor than the real metaphor. The real metaphor is there's only 450 Bitcoin available per day. there is a drive shaft that's turning the entire network. Every time $50 million of capital flows in the Bitcoin ecosystem, we turn it once. So Nakamoto raises $1 billion and they turn that 20 times, right? And when GameStop raises 500 million, they turn that shaft 10 times, right? And when 21 raises their 3 billion, they turn it again. And so we're turning the drive shaft, which is lifting everyone, because once the $50 million of capital comes in the network, there are no natural sellers left. Now the price must go up to find a new seller. As the price goes up, everybody in the network becomes that much wealthier and that much more powerful, and all of their business strategies catch energy and momentum. So everyone will pursue their own strategy. The Metaplanet people raise capital from the Japanese market. I couldn't sell into the Japanese market. They're not competing with me. They're orange pilling the Japanese investors. There'll be Bitcoin treasury companies in Brazil. There'll be Bitcoin treasury companies in France and Canada. They're all bringing their unique value proposition, and they will help their nation, their shareholders. But ultimately, the final beneficiary is always Bitcoin and the Bitcoin holder. And everything that is a derivative of Bitcoin will benefit from that. So I think we're in the early days where there's a dozen companies pursuing this hard and there's 100 pursuing it lightly. But one day, every public company will flip to the Bitcoin standard from the local fiat standard. And they'll do it because 25 years out, fiat sovereign debt will yield 3% and have a 3 vol. And Bitcoin will be 20% with a 20 vol, and it will still be 7, 8, 10 times better to be on the Bitcoin standard, even after 20 years of all of us doing what we're doing. So I'm not at all concerned. I think it's great for all those companies will be successful if they don't make a rookie mistake. You still got to execute, but they're more likely than not to be successful. They will all pursue a different strategy. We will all learn from each other. We will all benefit each other. The ultimate beneficiary is the entire Bitcoin network. I think the coolest thing that I've learned about Bitcoin this year is just the incredible diverse appeal that it has globally, right? The number of actors, from people in Brazil, people in, actors in Mexico, actors in Pakistan, actors in the Middle East, actors in France and the UK. The explosion of excitement about Bitcoin treasury companies. I meet someone like, yeah, I'm doing this in UAE, I'm doing this in Hong Kong, I'm doing this in UK, I'm doing this in Norway. Like the explosion of that, and then every time you see an exciting announcement, a soccer team that's embracing Bitcoin, GameStop embracing Bitcoin, the mayor of the biggest city in the United States embracing Bitcoin. This is a classic example of a viral, explosive phenomena. There's no way you can stop an idea whose time has come, and you see indicators this year that the time has come for this idea.
A powerful shift is underway in the Bitcoin market, and data backs it up. CoinGlass recently released a set of 30 trusted bull market peak indicators, and not one is signaling a long-term top. From the Pi cycle top to the MVRV ratio and long-term RSI, all point to room for explosive upside, potentially pushing Bitcoin's price toward the $135,000 to $230,000 range. At over $105,000 today, that may sound ambitious, but the models suggest the market is still mid-cycle. Their conclusion? Hold 100%. What makes this moment different isn't just technical, it's structural evolution. Bitcoin is no longer a fringe asset. It's being integrated, quietly but forcefully, into the financial system as collateral, as yield, and as balance sheet strategy. Companies are using it to issue bonds, back preferred stock, and generate long-term income in fiat terms. It's not about speculation anymore, it's about positioning. Michael Saylor, one of the asset's loudest proponents, described Bitcoin as a perfect machine made of imperfect parts, arguing that every new participant makes the system stronger. The driveshaft analogy he gave captures this moment well. Every injection of capital spins the ecosystem forward, lifting everyone with it. As new players, from sovereigns to startups, build on the Bitcoin standard, their energy fuels the network, and in turn, makes it more anti-fragile. This isn't just a bull run, it's a coordinated financial migration. When signals align, infrastructure matures, and capital flows converge, those who understand the moment don't exit. They prepare for what comes next. As we wrap up, is Bitcoin still a high-risk bet, or has it evolved into something foundational? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.